Brandon, got, what is this? Do you need your glasses?
That's a loan estimate.
All right, so this is a real document from a real transaction.
Yeah.
And what are the most important things that someone needs to pay attention to when they receive a loan estimate? But before you answer, what is a loan estimate?
So that's a good question because, well, this is a loan estimate from a client that closed last month. A loan estimate is basically a list of all of your fees, charges, interest rate, what it's going to cost you, how much is your monthly payment.
So these are all the numbers that are important.
All the important numbers that you could ever want to see, know, hear, like, and trust.
Ooh. And what are the most important ones? Like if you had to pick 3, 4 of the most important things on here, what are they? Like what's number one?
Well, I like the first page the most because there's really 3 things that I think that got to be that you got to pay attention to, right?
Okay.
The first one's your loan amount.
So loan amount is not the purchase price of the property. That's how much the bank's going to give you to help you buy it.
Right. That's how much the bank's going to loan you.
Okay.
Right. Based on your down payment or purchase price. And the second one is your interest rate.
That's how much the cost of the money, right?
Yeah.
Okay.
That's how much you're going to pay every month. It's not your APR. It's your interest rate. So that's your note rate. That's what you're going to pay.
So then we're going to have
month.
to ask another question then. But yes, continue. Sorry. So that
okay.
Number 1's loan amount. Mm-hmm. Number 2 is interest rate. What's number 3?
Number 3 is your total estimated monthly payment. That's the big one in the middle.
What is part of the total monthly payment? Like what's included in that number?
Yeah. So the monthly payment includes the principal and interest. That's how much you're going to pay based on your loan amount and your interest rate. And then also if your taxes and insurance are included, and if there's mortgage insurance included, that would be in your total monthly payment.
So there's not really any surprises outside of that number as far as what my monthly expenses are, except for turn on the lights, so to speak, like electricity and things.
No,
right?
There's always surprises. Yeah.
Well, calm down.
There could be homeowners association dues.
Okay.
That would not be included in there.
Okay.
It might be listed on here somewhere, but it'll say included in escrow, yes or no. And homeowners association dues, if you're in a condo or a development, will always be separate. You'll pay those separate.
So like flood insurance, though, we're right on the river right now. Would that be typically in that monthly payment?
Yeah.
Okay.
That's a law, actually. All flood insurance, if you're financing a home, has to be included in the payment.
Okay.
Sometimes you can get away with not paying your taxes and insurance inside of your payment, but flood insurance always has to be included.
Interesting.
Yeah.
Okay, so anything else on here that I need to really be paying attention to? Obviously, everything on here is important, but as far as a highlight reel, what else should I be looking at?
Well, there's a big number at the bottom, and that's your estimated cash to close. That's how much money you'd have to bring in with you to closing.
So that's both a down payment and other costs associated with buying a property.
Yeah. Mm-hmm. Okay. Any closing costs that you're covering and your down payment would be included in your estimated cash to close.
Okay. And this when do you get this usually? When do you get a loan estimate?
Within 3 days of having a contract in your hand, you should have a loan estimate that you can review, take a peek at, make sure it looks right. It doesn't have to be perfect in the beginning, but it really should be pretty close. And that's, you and your loan officer can figure that out. If there's something that looks wrong, or you want to pay extra to buy down your interest rate, or you want to put less money down, or
that
whatever.
Would be a time to address it once you're looking at this.
You can definitely make changes. It's not permanent. It's not set in stone. It should be a rough draft, though. Maybe 60 to 75% correct in the beginning, and you can make changes up until about a week before closing. If you decide to put more or less down, you can change that.
Correct, but do want to say if you're putting less down, it depends on your financing contingency, if you have one, and if you're protected or not with that lower amount. But
nobody cares about those.
Nobody cares. It's important.
And then the next page, you didn't really go over that, but this is where the rubber meets the road, everybody. This is how the sausage is made. That's what I would say. This is where all the money goes. It's everything from your title and escrow costs to appraisal, recording with the county, setting up your taxes and insurance account.
So this first page is the 30,000-foot view looking down, and then this breaks out what all those numbers actually mean.
Yeah. Okay. If you really want to geek out, this is a good page to do that. I like to keep focused on the front page because that's a nice summary. It's nice and tidy. But the second page is kind of a cost breakdown where all the money goes.
Cool.
And the numbers will match.
Right,
so
this page should be what's on the first page.
Mm-hmm.
And then this final page here, what's this?
This one I like to skip over. No, actually, so this is a good one. Third page of your loan estimate will have things like if your servicer is going to sell your loan, or if they're going to service it in-house, if you have to have an appraisal, what happens if you pay past the due date, if there's a prepayment penalty. So there's some good stuff on there too that you should look.
Okay. And of course, this one's been signed by the purchaser saying they received it, right?
Yeah.
Okay. Cool. Thank you, Brandon, for helping me go over the loan estimate.